The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as we wrapped up the week of trade on Friday, soybeans and bean meal were the upside leaders. Wheat was under some pressure. Corn largely just chopped around, couldn't find much direction, hung around 480 in D's corn on the day Friday, while cattle and hogs found some late buying strength. Let's talk about things here with Kent Beadle from Paradigm Futures. He joins us on Market Talk today. And Kent, it is great to catch up with you again. It's been a while since we've had a chance to have a conversation. Thanks for joining me on the show today. I hope you're doing well.
Well, I'm doing great, and thanks for having me, Jesse. Appreciate the opportunity.
Well, let's start with soybeans and bean meal. That was kind of the shining star of Friday's trade, wrap it up the week. And these grain markets as a whole have turned a little volatile again, and that's not a bad thing. Keeps us busy, keeps us on our toes, I suppose. But you look at bean meal, was that the big driver, do you feel, of the soy complex as a whole to round out the week on Friday, Kent?
Oh, it absolutely was. We made contract highs in bean meal here a couple different days this week, including today. We were starting to hear reports out of Argentina that there are no offers in the world export market for soybean meal. We're hearing similar sorts of talk out of Brazil, quite frankly. And of course, Brazil right now is trying to execute their safrinha corn program, and they're busy with that, but they don't have a lot of extra meal. They have been providing some soybeans into Argentina in order for them to be able to run, but we're hearing that Argentine crushers are running at somewhere in the neighborhood of 20% of capacity, and probably have their entire crush already forward sold for all the way up until next year's new crop. So it's a difficult situation, because what that means is that the world needs to come to the United States here for a while in order to get meal purchased. And we're just starting to ramp up the domestic crush. Of course, those domestic crushers have to compete with exporters to buy beans here now off the combine, and that's been kind of a welcome sort of development for the U.S. producer, because I've been noticing that some of the crush facilities here in the upper Midwest are paying some basis levels that they're not used to paying here in the month of October. Southern Minnesota bean basis, for example, running anywhere from 20 to 30 over the November contract, as we get ready to roll the bids from the November to the January at the carrying charge. These are still very, very solid bids for for the producer to move beans off the combine, and that's of course exactly what they'd like to do this year, because they're going to want to store corn. They're going to want to stop interest selling much more expensive soybeans, given the kind of interest rates that we have today.
Well, and to your point there about some of those basis levels in beans, you led me right into my next question for you here, and I'm sure you're feeling a lot of calls asking this same thing here. Should we be rewarding the rally in soybeans to end the week, or should we be thinking about possibly, instead of a cash sale, looking to protect some upside potential here? If we think about it, Kent, we got a very tight balance sheet in soybeans, and if folks are coming to the U.S. for soybean meal on top of other exports, et cetera, I'd have to think that this soybean market as a whole's got some upside potential. So break this down a little bit more for us. What should farmers really be thinking about in terms of their marketing plan for soybeans right now?
So, I've been looking at at soybeans as being very likely a trading range market. The longer that we go where the United States Department of Agriculture tells us that the carryout is 220, the longer we're going to have a good opportunity for us to trade to the higher part of that trading range. So what's the trading range? Well, I think the lower third is probably 1250 to 13. I think the middle range is going to be 13 to 1350, and 1350 to 14 would probably be the upper third of that range. I'm not sure we're going to be able to get to 1350 to 14 unless we can start to have a sustained period of soybean exports similar to what we had this week at 1.3 million tons, to maybe some weeks where we get on up to 1.5 million or 2 million tons. And that's where the development of the South American crop is going to be very interesting, because there's been a lot of chatter this week about the fact, well, there's some rain in the forecast in Argentina, and there's some rain in the forecast up in Mato Grosso and in northeast Brazil, where things have been dry. And yet you see pictures from some of the farmers down there, and you hear a lot about a lot of potential replant, which of course is going to potentially cut back on yields here a little bit, also cut back on safrinha corn acres or safrinha corn yield somewhere down the road. It's still too wet in the southern part of Brazil, and we're just not off to a great start. So the USDA has a balance sheet that has an awful lot of South American soybeans showing up in the last half of this marketing year. And if that doesn't happen, and we actually are able to, continue a solid export program, let's face it, we carried out the last 3 years. We carried out, I believe it was 257, 274, and 268 in 3 years, where we had prices a lot higher than here and major inverses in our market. In other words, the marketplace rationed our soybean demand in order to carry out more than 250 million bushels. And right now, the USDA's got 220 on the balance sheet. I think we've been rationing demand to make sure that we have enough bushels to be able to have enough soybeans to be able to manage the domestic renewable diesel program. I think that's been the function of the market, is to make sure that we have enough here domestically to be able to reach those mandates. And so things could get really, really interesting. And like I say, what it's going to take is going to be some sustained exports that would probably happen if weather doesn't get a lot better in South America. So I'm not excited about selling beans for a grower as we're in that 1250, 1270. We tested that area a few times. We are going to have some resistance on the soybean chart between 1316 and 1325. Why those areas? Well, the 45-day, the 50-day, the 100-day, the 200-day moving average all come in that area, as well as, I believe, the 50% Fibonacci retracement. So there's a bunch of resistance sitting up above the market. If you've got some soybeans that you need to price, you're probably going to want to price up against that 1315, especially if we get an early rally next week. And then the rally into the upper third of that possible range would likely come later on if we continue to have good exports and if the weather in South America doesn't appear as if it's going to be cooperative.
Great thoughts there on that soybean market, Ken. So let's move to corn. Corn, had you and I talked a week ago, we would have probably been really excited, hey, we're above $5 in D's corn. Well, that lasted about a day. And now we're back down to kind of where we've been chopping around here for quite some time, this 480 level. What's your take as you look at corn charts and just think about this corn market overall? Just feels like we can't go anywhere.
Similar sort of thought process in the fact that, first of all, the corn carry out at somewhere, whether it's 2.1 billion bushels or it's 2 billion, 2.2. I mean, the USDA has kind of been all of those places at different times here this year. It's enough corn, right? It's That's not a rationing situation, so it doesn't point to some massive rally unless we get into some big weather issues sometime down the road. So for the foreseeable future, what I see is again a trading range type market with value for corn probably being 450 to 475. We actually approached that area again here this past week on the lows here. And then this 475 to $5 probably going to be fair value. You know, we had a bunch of weekly closes just above 490. This week we're at 480. Again, that feels like a fair value. You get a nearby futures contract up above $5, and you're going to start to trigger some selling. And of course, there's some fairly significant resistance up above the market. Some of the moving averages, longer term moving averages, are up above that level. And of course, a lot of folks are looking at that gap. There's a gap on the chart up near 5.25 that, you know, a lot of folks thought last week, well, we're going to go up and fill that gap. Well, you know, when you're harvesting the last, 30-40% of the crop, you're just probably going to have too much natural selling in order to get that kind of a move at this point in the year. And so I think that might have to come a little bit later. But here's the good news. You know, the good news is on the demand side. We had a very nice number in ethanol this week. I think it was the second highest for this particular week of the year. We had a nice rebound here in export sales again. Keep in mind, this is the time when the Brazilians supposed to, you know, get most of the world market with safrinha corn, and we sold 1.3 million tons this past week. I think that's pretty good. You know, livestock margins on the feed side have contracted a little bit, over the last couple of weeks, and certainly in cattle. But you know, those markets actually recovered very nicely into the end of the week, and the margins didn't get beat up nearly as bad as I thought that they might. And so, it tells me that there's some value in corn, especially as you get down toward the cheaper part of that range. And I'm going to look to have some patience to do my marketing in that upper third. So, you know, a little above $5 up toward, 5.25 is where I want to try to be marketing corn here this year.
We're talking today with Kent Beadle from Paradigm Futures. Kent, I'll get to livestock in a second. You mentioned that, but I want to talk wheat real briefly. Some mixed signals out of the Ukraine this week. Was their humanitarian corridor open? Was it closed? Was it open? I think that had a little bit to do with this wheat market, but we know too there's a huge Russian crop, however big it may be. We don't exactly know. We have better rains in the southern plains for KC winter wheat. So it felt like there was just a few different things lining up on Friday that kind of weighed on the wheat market. What's your thoughts there for us real quick?
Well, this morning, the Ukraine denied that their export corridor that they're trying to sponsor by themselves was somehow closed. In fact, they said very specifically that there were boats that were loading and boats that were getting ready to actually leave port. And I read a story a little later this morning that suggested there were 3 boats that had left port and were on the water trying to, going to navigate this humanitarian corridor that Ukraine is supposedly set up or is trying to manage with their own navy. It's fraught with danger. It surprises me, quite frankly, that there is enough interest within the shipping community to be able to take the risks that I think are very clearly out there, with the Russians potentially saying that any ship in the Black Sea is potentially a hostile ship. Of course, on Thursday, there was talk about Russian mines and potentially Russian drone strikes on ships. And so that's what got the wheat market kind of excited. When the Ukraine, tamped that down a little bit, wheat fell back. And, I think the good thing is that we haven't made new contract lows in Chicago. We haven't made new contract lows in Minneapolis. We're trying to hold those markets together. Kansas City's been a different story, obviously. It just seems to be the place where we're getting the most pressure, and it looks the worst technically. But I think that there's going to be an awful lot of demand for good quality spring wheat, and I think Chicago wheat, at the discount that it has to the hard wheats, is finding its way, that it's priced a little bit into the world grid. Obviously, we've had two major daily announcements on sales to China, and then on this week's sales report, people may not have noticed it, but there was 62,000 tons of soft red that was on this week's report going to China as well. So we do seem to be cheap enough to be connecting with soft red a little bit into that marketplace, which is supportive.
All right, well, let's wrap up with the livestock trade, Kent. And cattle, again, a good end to the week on Friday with triple-digit gains in the fat cattle trade after a really rough start to the week on Monday with that bearish cattle on feed report we saw last Friday. Hogs, too, had a decent up day on Friday to kind of round out the week. So what's your take in this protein sector, cattle and hogs overall, as we ended Friday on a fairly good note across the board?
Well, cattle's going to be interesting to begin with, because what we did technically is we left this huge selling exhaustion on the candlestick charts that I look at, and we managed to climb our way and close back above what was important weekly support, which was at $182 on the Dees contract. So, that really looked good for what was a bad fundamental week, considering the size of the placements and the lack of marketings and the implications of the amount of beef that are going to be on the marketplace, a little bit sooner than maybe had been anticipated. That ultimately was what the driver was for Monday's trade. A couple of other things happened, though, and it wasn't just the technical trade. It wasn't just it was the cash trade, right? We started out the week with some knee-jerk cash trade at $180 in the Southern Plains, and by the end of the week here, we're hearing reports of some $185 unchanged for the week trade in Kansas, and that's that, again, a really, really solid sort of technical kind of situation when you consider, markets that ultimately don't go down on bearish news are not bearish markets. And as some of the people in the industry are saying, the cattle on feed report itself didn't tell us that there were more animals. It just told us there were more animals on feed. And so inventories are still lower than a year ago. We're hearing that the calf crop is going to be lower than a year ago, and future inventories still look to be a challenge and quite supportive for the market longer term. We probably washed out a lot of speculative length, but when you wash out speculative length, sometimes that can be bullish, because now now that you don't have that hanging over your head anymore, right? And we did have a lot of large speculative contracts on the long side, especially a month ago. We've been liquidating for a few weeks now, and we probably cleaned out 20 or 30,000 contracts, I'm guessing, on Monday alone.
Well, Kent, if folks want to reach you and get marketing advice there at Paradigm Futures, I know they can reach you very easily. How can they get in contact with you, Kent?
Yeah, so my phone number is 651-491-2119. Be happy to take your call. Otherwise, you can learn more about Paradigm Futures at www.paradigmfutures.net. Place for you to contact us there, and we'd be more than happy to talk to you if you've got marketing needs that we can help with.
Well, we appreciate the time and the conversation. It was great to talk with you again. We'll look forward to getting you back on the show again soon. Kent Beadle with Paradigm Futures, thanks for joining us on Market Talk today. Have a great one. We'll talk to you again real soon.
Thanks, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.